The fiscal cliff in the US has been staved off, economic growth in China pushed forward, and the worst of the euro crisis is over, at least according to European Union Commission President José Manuel Barroso. Is there really a cause for so much optimism in Europe? That's what I'll be discussing with Jochen Möbert from Deutsche Bank Research. Mr. Möbert, first of all, let's have a look on the global economy. How did the DBX perform in December?
Well, in December it has stabilized on the long-term average, and it shows that we will have some growth in 2013, but not a very bullish situation.
The situation in December was quite difficult. For example, the fiscal cliff. The fiscal cliff in the US has been staved off just for a few months, just for 2 months to be exactly. And what does that mean for the global economy?
Well, for the global economy, it's still the baseline scenario. We did expect that it's relatively difficult to find a solution, and we did expect, let's say, postpone a really big solution. So they will continue to reduce deficits and will continue to reduce expenditures and raise taxes. But the major measure to cope with the debt crisis in the US is printing money via the Fed. And I think the same should be true for the next months.
Okay. Let's have a look on Europe. There have been some positive statements in the last few weeks. For example, Mr. Barroso, who said that the worst of the euro crisis is over, and the same maintained German Finance Minister Wolfgang Schäuble. Why are they so optimistic?
Well, there is a positive if you look at financial market data, and there are a lot of positive decline of risk measures and lower yields in peripheral countries. That's very positive, but it's only if you look at the financial markets. If you look at the whole economy and at the real economy, it's still a problem, and Angela Merkel and Klaus Regling from the ESM clearly said that the structural problems are still there, and it will need a few years to cope with these problems.
So this confidence must seem highly misplaced to people in crisis countries like, for example, Spain or Greece.
Well, maybe if we have a very positive 2013 and many risks await, then maybe we see that unemployment rates start to stabilize, but we are far from lowering the unemployment rate in Greece and Spain, and for now it seems both countries remain in recession, and there are even forecasts that there might be a recession until 2014 of some competitors. So for now there's no quick solution and no improvement in the next month.
Economically, Northern and Southern Europe are drifting apart. What can be done to stem this development?
Well, we could continue with the solution mechanism we had for the last 3 years. We'd provide liquidities and guarantees to the Southern European countries. That's one solution, but this will not help to improve growth and to lower the unemployment rate. There's still a solution. They have to reform their countries. They have to implement structural reforms in the labor market, in the tax situation, to improve the tax situation. So these are still the measures they have to implement.
Well, how to stabilize Europe, we will talk about this later on, and you can watch the full interview on www.dw.de/English/Made in Germany. Thank you, Mr. Möbert.
Thanks for having me.